Hey, welcome back. MPW just released its latest earnings report and there is a lot to talk about, so here is an update where we look into the earnings, debt issuing, tenants and more. Q4 was negative as expected due to impairments and fair value adjustments for Prospect and PHP. Without it, the net income would have been pretty much flat, but the funds from operations are still positive, so it's not really that bad. The NFFO or AFFO are usually much better than the net income when we look into REITs because they are adjusted for these impairments and amortization. These aren't actual money that they have to pay and can often be huge for a company that's pretty much just real estate. However, I have to mention that if things don't improve, now that they'll have more interest to worry about, the dividend might also be cut as they make less money. There should be some improvements as the rent from the assets transition from Steward recovers, but you can never know. Financially, they are still in a good position with enough assets to cover the liabilities even at a discount. They don't have to pay it all at once, of course, having a very common business model for a REIT where they just snowball the debt, invest it and win from the difference in interest received and the one that they pay. A majority of that difference then goes into dividends and that's basically the company. Again, the main issue for them and actually their primary focus in recent years has been repaying the debt up to 2027. To repay it, as I said, they can issue more, sell assets, cut the dividends or other costs, or issue stocks, which isn't really an option now. They sold assets and cut costs until now, but recently they issued another like 2.5 billion worth of notes that they'll use to repay the current ones. I said in the previous analysis that if they issue like 2 billion combined with the asset sales and cash inflows, that should pretty much cover the upcoming years, which represent a significant amount of their debt. So if they get out of the current issues, the company should be in probably a better state than ever before, so not just a recovery. And to be fair, they'll pay like a 3% premium on the US treasuries, so yes, 8% looks like a lot compared to the 2% they repaid, but it's not that much in this environment. They probably delayed it as much as possible to wait for the Fed to cut more, but a day after the Fed said it wouldn't cut, they announced the issuing. And very importantly, with that 0.8 billion that would be left after repaying 2025 and 26, they can even repay exactly half of 2027, so they are already in a much better position even if they have to pay some more interest. And as a note, the 2027 debt has a 5% interest. A mention about the notes, they were 5.5 times oversubscribed, so the demand for them was insanely high. There is some more uncertainty now with Prospect's restructuring, but it's a, let's say, necessary and also to some degree unexpected step in MPW's recovery. These operators in general, not only MPWs, relied on the low to zero rates environment and now got hit by the very high rates, the pandemic which directly affected them, inflation, workforce issues and so on, all at the same time. Some of them won't get out of such an environment, but at the end of the day, the healthy, good or lucky enough ones will survive. If MPW also does, which I think is very likely, the quality of their tenants will be better, they won't depend that much on one, on top of not having that much debt since they are focused on repaying a lot. Now again, the key thing to remember is that they own the property and the tenants just rent it. If you can pay the rent and are beyond help because MPW tried maybe too much to help their tenants, they find another one. We saw this recently with Steward when MPW basically kicked them out as a final resort and found other tenants, and we'll see it again in the future. Hopefully they won't have to do this anymore and no other tenant goes bankrupt now, but you can never know. Also, an update on the short interest, it's now even higher than before and MPW is still one of the most shorted stocks on the planet. This could be a reason why we see some huge, even double-digit jumps for good news, and it's gonna be interesting to see how this ends up. You know, these positions don't just disappear. Eventually, this has to be covered, and if the company recovers and starts paying some massive dividends again, you can sustain the position, so you have to buy to cover it. The short ratio, meaning the theoretical days to cover it based on the average daily trading volume, is like 15, so the amount of demand this would generate would be insane. And again, many of these positions, as we saw in time, were open even below the current price, so this isn't really smart money. If they rush to cover it, that's a massive short squeeze. Anyway, I just wanted to do a quick update on MPW. If you want to support the channel and see if and when I buy this again, check out the Patreon link below. Again, as I said in the analysis, I think they are going in the right direction and the stock is already showing some improvements. A recovery won't happen overnight and there is still a risk, but at the same time there is potential for a short squeeze, rate cuts are coming and so on, but more in this video. As always, what I cover in my videos shouldn't be enough for you to make any investment decisions, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out and make sure to subscribe. Thank you for watching and I'll see you next time.